chairman. For. I can, oh, okay.
Yeah, I didn't turn it. It's fine.
Okay.
Fine. Just file. How do you wanna?
I could just get in just.
So you have an estimate and then Tim will walk through. I figure we do it from here since it's.
Yeah. I could, yeah. So I'll just go. And consider it, like, for the staff, or just to clarify.
Yeah.
Have 10.
Yeah. I mean, I. Just. He's on this.
Yeah, yeah.
The technical meeting. And then I have to do that. Yeah.
Oh, you're not doing it?
Yeah.
All right. Hi. How are you?
Actually, I'm. Obviously, sure. Okay, sure. Yeah.
I have it as Confederate. I know you're.
Yeah, I'm sorry.
Yeah. That would be helpful.
Yeah, you'll see.
Do you know what like file?
I think it's great.
Monthly breakdown of uncollectibles. This one.
Yeah.
Okay. Yeah.
Yeah. Sure, Smokey's here.
Oh, good. We're off. Yeah, okay.
Well, I'm more. Yes, that's it. Something I've been in here, you know.
Yeah. I stayed. Yeah. Schedule. Yeah. About, yeah. Better.
That's.
Jim. I do, yeah. She is. I don't have the ability, you know, I came into it. Experience. I like that, yeah. Lawyer. Yeah.
You're so adaptable.
Yeah, yeah.
Hey, Tom.
Oh, and the last. Yeah.
Yeah.
Here on the bottom.
Good morning and welcome back to docket 230104. Before we resume with Frost, this time by the Office of Consumer Counsel, I think we have a brief administrative matter from staff. Attorney Riley, please.
Good morning, Chairman Gillette, and thank you. After further discussion with authority staff, we wish to clarify late file 3 for the company. And I have Mr. White behind me who can provide technical clarification.
Okay, very good. So we're going to clarify the request for a late file exhibit 3. And Mr. White, you want to step to the mic, please?
Thank you. Yesterday, the request for LFE 3, from what I recall, it was regarding hardship and non-hardship on collectibles. And I just wanted to clarify for a total number to look at, specifically related to CAE 51, cell N8. Your response was for about 35.5 million. So it included the uncollectibles for alternate suppliers as well as cancels and rebills. So that's the number that we're looking for, not just hardship and non-hardship, which in other parts of the filing I've seen as about $33 million. Excluding that, we want it inclusive of everything. Thank you.
Thank you. So to restate, what I have now is to refer to CAE 51 cell N8. So we're looking for the monthly total net write-offs for each customer class for years 2021 and 2022, inclusive of all the data that is in cell N8. Is that clear?
Yeah, 2021 and 2022.
Yes.
That's clear. Okay, thank you.
Thank you, Chair.
Thank you, Mr. Wright. Okay, so I am up to 5 late files and we have 1 read-in that may be transferred to a late file. So apologies to the OCC. Let me just see if I can get clarity on where we are with that read-in.
Yeah, I thank you, Chair Gillette. On that one read-in, I think we are going to ask that be converted to a late filed exhibit. It's numbers. It's going to be more conducive to a late filed exhibit.
Of course. So that would put us up to late file exhibit 6. And just to clarify what I had jotted down yesterday, again, referring to CAE 51, I think we're looking for I wrote down, provide an update to exhibit G to disaggregate the RNS and LNS revenues. Is that?
Yes, I had that. It's in relation to the CAE at 51 attachment 1, a breakdown of the uncollectible amount in the TAC revenue requirement. I think we're saying the same thing, but maybe we can get clarity to make sure we are understanding that.
Okay.
That was, actually,
I believe that was also Mr. White
okay.
that asked to identify the 1.8 million uncollectible write-off allocated to transmission. Where did that show in Exhibit G? And since the number itself is not in there to show, back up from Exhibit G to that $1.8 million number.
Okay, Mr. Ryer.
I told Mr. White that he could go upstairs and listen to this
Okay.
upstairs. So I'll double check with him on that and get back at the end of the hearing.
Of course, we'll table that till the end of the hearing. I will mark it as late file exhibit 6 and we'll get clarity. So if we have any new late file exhibits at the request of the OCC, we'll pick up at 7. So unless there are any other administrative matters before we resume, then let's turn it over to Attorney Talbert Slagle and the OCC to begin, please. Good morning.
Thank you. For the record, James Talbert Slagle. I'm a staff attorney with the Office of Consumer Counsel. I do have a couple questions that I want to go over. Some of them, obviously it's tangentially related to stuff that maybe was raised yesterday, but I think we have some different questions. So just bear with me. If the first one goes to OCC 21, the response to that, it was Mr. Jessup. I just want to frame the issue. So back in docket number 200315, which was about COVID, there was order number 4, which required the company to track costs incurred from the COVID pandemic. Are you familiar with that?
We are familiar with order 4 in that proceeding.
Okay, thank you. So according to the company's response to OCC 21, the company did not attribute any of the 2022 non-hardship uncollectible expenses included in the GSC as COVID related. Is that correct?
Correct.
Okay, if you would refer to ODR 06 attachment 1, page 2 from docket from the rate case 220808. In that document, the company requested recovery of COVID uncollectibles, including forecasted amounts through 8/31/23 in that rate case.
Could you please give the reference again?
It's ODR 06 attachment 1, page 2. from
DR.
220808.
Yeah, I guess I'll have
Oh,
to check
okay.
with the panel. I don't think that's in the record in this case, but I don't know if the panel's. If you
I
could-
may be able to get that.
Yeah, if you could phrase, maybe just walk them through the specifics.
Right, I'll go through my questions and then maybe if we need a late file, then we can do that.
I'd like to just take a quick look at the document if you could just give me one moment.
Oh, that's perfectly fine.
ODR 6, attachment 1.
Yes, ODR 6, attachment 1, second page.
Okay, I'm there.
Okay, so you see there that you requested recovery of COVID uncollectibles forecast through 8/31/23.
I do see that this relates to COVID uncollectibles, and I also see that it goes through 8/1/23. I wouldn't characterize this as a forecast of uncollectibles, though.
What would you characterize it as?
Well, it reflects actual uncollectible expense up through a certain date, i.e. June 30th, 2022. And then it extends up until the beginning of the rate year. But if you notice, the mid-month additions column is blank for the period July 1, 2022 up through August 2023.
Okay, so that goes to my question. So my main question was worrying about double recovery. Is there any double recovery here?
No.
Okay, why not?
ODR 6 relates to non-hardship distribution uncollectible expenses, which are not recovered through any of the RAM components.
Okay, so it's just be recovered through the rate case, but or I'm confused. I'm sorry.
Let me back up and see if this helps, and then I might invite a co-panelist to weigh in. The company has a variety of different rate mechanisms, including base distribution rates, the TAC, the SBC, the GSC, et cetera. The COVID regulatory asset that ODR 6 relates to includes uncollectible expenses that go to the company's distribution rate component,
Yes.
not any of the RAM rate components. So I'm sorry if you're getting at something I'm not seeing, but I don't see how there could be double recovery.
Okay, thanks. Just wanted to confirm and I appreciate your help.
No, I appreciate it.
Thanks. Okay, moving along. So now we're moving into the non-bypassable area. So if you could, this is CAE 032, which again is Mr. Jessup here.
Yes.
Okay. So your response states that corrections regarding the 2021 Renewable Connections Program were made in January 2022. And those corrections result in an increase to the 2022 MBF MCC expense, correct?
Correct.
So did the company update the renewable connections amount to the corrected amount in docket number 220104?
The error occurred in December of 2021. So when we filed the calendar RAM for 2021, we were not aware of this, so we did not make adjustment in what we requested to recover in 2022. But we made the correcting entry in January 2022, which now we're asking to recover in the 2023 RAM.
Okay. So are carrying charges applied to the corrected amounts?
Yes.
So could you do a read-in or LFE to identify those carrying charges?
Yes, so the short version was it was a benefit to the ratepayers in December of 2021 because we understated the reg asset that we should have recovered. And then basically during 2022, the customer benefited, and now we're going to ask for that. So I want to clarify the question. What are you asking in isolation to isolate the $1.6 million and what carrying costs was versus if we would have reflected it in December of 2021?
Yeah, just the difference, yeah.
Okay. So say December 2021 would have been done correctly, what would have been the carrying cost going forward versus the way it was done and then corrected in January? So there's arguably like 1 month timing difference.
Whichever you think is
Okay,
best. I mean,
okay.
we'll accept whatever you provide to us, yeah.
We'll take a look at that this morning and see what we can do, but it may very well be a late filing, but okay.
Okay, so I'll mark that as read and see for the moment. Just market carrying charges and Attorney Talbert's legal. I may need you to restate it later if we transition it into a late file exhibit, but I'll just mark it read and see for now.
I'll do my best. Okay, oh, you're back. So this is OCC 24. It's again you, Mr. Jessup. So in that you requested the trial balances supporting the amounts in the current case. And at attachment 1, tab 5, it's titled Distribution Trial Balance 2023. Should that actually say, but that contains the 2022 balances, is that correct?
Yes, all of these are 2022 activity.
Okay, thanks.
Yeah, sorry about that. Yep. I'm sure it was, we're doing it in 2023 RAM, et cetera, but yes.
I know,
2020.
it gets, I understand. So line 45 contains amounts for profits from tangible fixed assets. Could you explain how these are treated for rate making purposes?
Just a minute, my computer's on the fritz here. We're back on the distribution tab. Which line number, please?
45.
The roughly $80,000.
Let me see. Oh, sorry, mine just the top. I think that's right. Line 45. Yeah, $80,000, yeah.
That's what it seems like. I could just go through them. Subject to check, I would expect that to go through the depreciation reserve calculation. As a
Okay,
gain or loss would go through the reserve calc.
so it wouldn't get returned to ratepayers first
Or
year,
in theory, it would get returned through a depreciation study in a rate
depreciation.
case, et cetera.
right? Okay, okay. So are these profits from the tangible fixed assets, are they for utility assets?
I'll have to check on that.
Okay, so one of the things, could we get an LFE related to the transaction amount shown in the April and August? You know, the asset descriptions, cost, sales price, date of sale, things like that.
One moment, I think Mr. Burge wants to weigh in,
Oh, okay,
our fixed assets person.
expert.
Right, so those. Yeah, those are sales of fleet vehicles.
Okay,
So we generally, when we retire a fleet vehicle, we take it to auction and then we would have the salvage value less what we made in the auction. And in this case, there were proceeds. So it's related to vehicles. There would be in general property. So.
right.
Yep.
So that's why it's a little lower amount and, yeah.
Right.
Okay.
I don't know if you still want that additional information or it's enough to just know that they're vehicles.
I mean, that explains it. I mean, I don't think that we need that
Okay,
granular level of detail. So
Right.
thanks for answering.
yeah, you're welcome.
And just another question. So on line 46, the provisions assessment, what is that? Oh, she's coming back. Exciting.
So, that particular account code is used to do an allocation of common costs between the distribution and transmission business areas.
What does that mean?
So because we split, and my understanding is that this is just a trial balance for distribution, right? So certain assets such as vehicles are common property. So there's an allocation between distribution and transmission because we use those assets in both businesses. So whenever we have income statement impact from assets, be it depreciation or in that category, there's a system routine that we use to allocate those incomes and expenses between distribution and transmission. So this is more of a technical, it shows up like a secondary account because the original flow happens in our common business area. And then that common business area is cleared out to reflect either in distribution or transmission. So it's related to the same activity in this section, gain on asset disposal. It just would have flowed through a common account initially and been allocated to distribution or transmission.
And it's just, I mean, they're in different months than the actual sales of the vehicles. I mean,
Right. I would have to look back at what the original transactions were.
it's,
So it's, if that's necessary, but that just explaining like kind of what that account is used for and why.
I don't think that's necessary.
Okay.
Thank you.
Just to say.
I'm moving
More
on.
trial balance questions?
Unless you can think of some that I should ask. I mean, something I'm missing.
I don't think so, but I'll be over
Okay,
there.
okay, I know where you are.
All right.
Okay, now we're just gonna move on to general RDM questions. So now if you could go to IA, exhibit IA.
Is that from the March 1st filing? Mr. Thompson?
Yes, I think so, yeah.
I'm there.
Okay, good. So do the actual revenues on line 4, do those include billed and unbilled revenues?
Yes, consistent with the authority's direction in last year's RAM proceeding.
So that's everything, okay. And then my last question before I turn it over to my colleague here. So OCC 28. And this is the reconnect service fees. How are those reflected in the docket 220808, which is the rate case? Do you recall?
I do. Those are reflected consistent with how they were reflected in 160604 as a reduction to expense.
That was my next question. Were they consistent? Okay. So that's been consistent across the whole time since, since 160604.
Certainly since 160604, I don't recall how it was treated in prior rate cases.
Okay.
I have no reason to think it's inconsistent, though.
All right. Thanks so much.
Good morning, Richard Sobolewski. I'm the Supervisor of Utility Financial Analysis at the OCC. I think most of my questions are for Mr. Kolko, but anybody on the panel could jump in when they need to. My first area is on the RDM. I know yesterday there was quite a bit across from Puro staff on some potential different alternatives for the RDM, especially for some of the CNI customers. The RDM that's been in place for UI, it's been the same since, I guess it was a pilot program, I guess?
Yes.
Okay. And is that the same as what Eversource has, the same identical type and applied in the same manner?
I can't say that for sure. I'd have to check. I'm not aware of their actual mechanism.
Okay. The mechanism that UI has, how is it similar to mechanisms that are in place for other Avangrid electric companies?
I can speak to that, Mr. Sobolewski. The difference that UI's RDM structure compared to the New York or Maine companies is the other revenues component is under the RDM umbrella. In the other jurisdictions, those targets are set in a rate case outside of the RDM, and they have independent reconciling mechanisms, if any. The other difference is there's a single rate for all service classes.
Okay.
And in other jurisdictions, there's a distinct different rate between res and non-res, residential and commercial industrial.
In those cases, is the revenue shortfall just within the rate classes, or is it a total that's allocated over all the rate classes?
No, the reconciliation is done distinctly to the individual service classes. So you could have, say, residential may have been in an over-collected state compared to target, where commercial industrial may have been in an under-collected during the reconciliation. So one would have a reconciling credit and one would have a reconciling surcharge.
And is it the same? Is it a per kWh charge or credit that goes back to customers?
For non-demand classes, it's a kWh volumetric charges. For service classes in the CNI that have a kW charge, it's generally a kW charge, whether it's a credit or a surcharge.
Okay. In regards to going forward, the future of, the electric distribution companies, the system that we have in place here, that UI has in place for the RDM, would you agree that it could be used to return additional sales associated with electrification? There's increased sales that come back that aren't necessarily budgeted in a rate case or in some other manner, that it could easily be returned through the type of mechanism we have in place now?
Theoretically, yes. If beneficial electrification allows revenues to exceed the approved revenue target by the authority, then that would result in an overcollection at the end of the RDM year. And then yes, a credit would be refunded during the RDM reconciliation.
And since it's the same credit or charge for all the different rate classes, it could be an easy way that if there's excess revenues, it's returned to all classes in that manner, is that correct?
The way the UI RDM
Yes.
structure, yes, that's correct. It's a single reconciliation rate across all service classes.
Okay, in regards to some discussion of using of the RDM piece being charged to a customer charge. I know, Mr. Kolko, you had some reservations and concerns about changing the residential customer charge. Is that correct?
Yes.
Okay. In Connecticut, for your company, when the maximum residential customer charge was set, was that in one rate proceeding, or was it a rate proceeding and a generic proceeding, or multiple rate cases?
It was first set for 2017 and 2018 in UI's last distribution rate case that was 160604. But if there was a deeper look at it solely for that into another docket that was 170112, where we set the rate for 2019 for rate year 3 was set via the MRCC docket. So the first 2 years were set coming out of UI 160604 rate case. And now we are in another rate case where the MRCC is going to be set going forward in that rate case, 220808.
And in that rate case, the companies, in the current rate case, the companies proposed a decrease to the residential customer charge. Is that correct?
Correct.
The proceedings regarding the MRCC, there were several different parties advocating for one position or another on the residential side. Is that correct?
I believe so. Yes.
Your discussion yesterday about embedding potentially some of the potential decoupling charge to C&I rates in the customer charge. Is that done in other jurisdictions that you're aware of?
Not that I don't know. I don't know how it's done in other jurisdictions on a detail level.
Is it done with any of the Avangrid companies?
I have to defer to my colleague, Mr. Patel.
I apologize. Can you repeat the question, Mr. Sobolewski?
Yesterday, there was a discussion about embedding potentially some of the C&I decoupling into the customer charge. Do any of the Avangrid companies do that?
No.
One final area on decoupling. Is anybody on the panel familiar with the way Connecticut does decoupling for the water utilities, where they basically just look at what the allowed revenues are and look at what the actual revenues are, come with a percentage, and then apply it to the total bill? Is anybody aware of that?
I'm not aware of that.
Is that something that, could be done for UI, switching to that manner, looking at the total distribution revenues that were allowed versus what actually came in, and then just, apply a same percentage across the board as a line item as a percentage? Is that something that your billing software would allow?
It would require modification to do that. I think it's possible. I don't know how much that would cost, but it would probably be a multi-month project to change what we have to go to there. I mean, conceptually, it can be done.
Because now you take everything, no matter what the source is, and it's applied to a KWH credit or charge.
Right now, that's what we do, yes.
Yesterday, there was quite a bit of discussion about cost allocations of various components of the RAM mechanisms. Mr. Kolk, are you aware if UI and Eversource follow the same methodologies for allocating NB, FMCC, SPC, and other items?
We may not. I don't know specifically the detail behind their allocations, but I believe that there are differences. I just can't identify them specifically.
In regards to when the current allocations, cost allocations were determined, was it in a single proceeding for UI and a separate proceeding for Eversource, or was it all in the same proceeding?
I don't know how the Eversource allocations were determined, so I can't answer that.
But there was not one generic proceeding that decided what the allocations were going to be.
No, a lot of the allocations came out of UI's 2005 rate case. Some of those may have been applied to Eversource through that, but there was no generic docket. There had been one established, 160230, I think it was, but that docket was terminated. That was going to be a generic cost of service allocation type of docket, but it never really got off the ground.
Okay. In some of your responses to staff discovery, I think there was a discussion of new items, and I think basically it was some of the, I'll call them PPAs for renewable generation that were coming online. And I think is it correct that you basically recommended using energy, basically the kWh charge equal to all classes based on energy sales? Is that?
You're referring to Exhibit Z?
Right.
Those allocations in there? Yes. Most of the purchase power and behind the meter generation, I propose the energy allocator.
Okay, and I think yesterday your testimony was there was no real cost causation to any of the classes, so that was, or to demand or to what have you, like some of the other components, so I thought that was the best.
Not on those purchase powers. On those purchase powers, I think I said they were like fuel, and
Right.
fuel in the old days, or in a bundled case when we used to have the power plants, fuel expenses were often allocated based on energy because consumption of fuel varied with consumption of energy. And so I applied that approach when I proposed to allocate energy generation that was not specifically built to handle congestion based on energy, like we would have allocated fuel back in bundled days.
Mm-hmm. If there was going to be a wholesale switch on allocation methodologies for the RAM components, do you think that should be done as a generic docket, or do you think it should be done in the current docket? What was your preference?
I think we can do it in the current docket, but certainly there may be reasons to do it in another docket. If there was a consistent, if the authority wanted a consistent approach for all Connecticut customers, then a generic docket would be the place to do that.
If there was any thought of using the customer charge as the residential customer charge, you think that should be noticed so people who participated in the those old dockets could be involved again rather than doing it here when they weren't necessarily knowing that those changes could happen?
Yes, absolutely.
I think that's all I have. Thank you.
Thank you. Anything further from the OCC?
Just a clarification, talking about the carrying charges that we were seeking. So basically what we're looking for is the total amount of carrying charges sought for recovery and the time period over which those charges were incurred. So if that's helpful at all.
Yes, I was just talking with my coworker on the team here, and one easy view is we would have had a reduction in December 2021 to our overall reg liability of $1.6 million. So in December, we recorded NCR on a larger reg liability than we needed to. So we corrected it in January. So it feels like we really only had 1 month of NCR that was amiss. And that we can do it in a late file, but that's only a handful of $1,000, maybe, maybe between $0 and $10,000.
That's fine. That's late file is fine.
Okay.
Okay, so it'd be late file exhibit 7, and it's to provide the carrying charges, or what? Sorry.
Related to the,
Renewable connection.
yeah, the
program,
renewable correct
error
connection,
correction.
the error correction. Yeah, exactly.
Yeah. And I don't, on the one hand, I certainly want to provide you what you want. On the other hand, I don't want to make it more complicated than it needs to be. Is one option is, like I alluded to, we can take our December of 2021 calculation and make the entry correct in that reflection. And the carrying cost going forward would be slightly different because we missed out on $1.6 million reg asset adjustment because we recorded it as $1.6 million reg liability. And then just run that through calendar 2022 when we corrected it in January, and we can say, here's what the carrying cost would have been if it had been reflected correctly in December. Here's what the carrying costs were because it was incorrect in December, but corrected in January, kind of that 1 month disconnect. And that's what we can provide you.
I think we just want what you're actually asking for. So that would be the latter, correct?
Yep.
Yeah, that's what we want. That's the actual carrying cost, not what it would have been, but just what
The
you're
actual
actually
carrying
seeking.
cost for the whole NBF MCC. Or just
Oh,
for the
just that.
RCP.
Yeah,
piece.
just the RCP piece.
Not just $1 million, just $1.6 million. I'm not trying to be hard to get along with. Just $1.6 million error correction.
Yeah, just for the error
Okay,
correction.
thank
Yeah.
you.
Okay, great. Thanks. I think that's it for us.
Thank you.
Thanks.
Okay. So I'm going to turn back to Director Ryer for the clarification of late file exhibit 6, please.
Thank you, Chairman. I just wanted to confirm that authority staff is comfortable with the company's understanding of the request. Okay, thank you.
Thank you. For late file exhibit 6.
Thank you.
Okay. Okay. Do you have any questions? I don't have any questions either. So I believe that means that it is an opportunity for a redirect. So attorneys, if you'd like a moment to consider redirect.
We'll take just, if we could have just 5 minutes.
Of course.
Okay, thank you.
They want us out.
Yeah, we're very easy to search. Next Wednesday.
Did you guys see the what is it, 67 Oh, no. Yeah.
When you come over this Monday, I have to get you hooked up with the drives.
Yeah. Are you gonna be?
I can be. Are you?
I mean, yeah.
I'll go when I'm ready.
They made me. It is, but it's. No.
Yeah, you gotta blow the dust off.
Yeah. They're supposed to move me tomorrow.
Like physically?
Yeah.
Yeah.
Like, cause I don't love that one. Because. Yeah.
Were they gonna put you in Paul's old spot?
And I know it's. But there's a huge shadow. Then NRES is totally. Yeah. So. Outside or all. It's like that second row. It could be a carve out, it could just.
I think we should all be. I think we should, both squads just storm that corner of the office and take it over.
Yeah.
Better view.
They were gonna try, no, within the next decade.
Was that?
I would imagine it's pretty quiet.
Yeah.
Another one was, they had a study.
Not that it's very loud in the other area. I mean, we get usually,
They made it broader and it's us.
regulatory group will have it. We'll always be there. That's it. And then whoever from
It's not really a spot.
wholesale contracts.
Yeah, because, see, a lot of these.
So,
Hazard
yeah, and I don't know.
Of course, with all the engineers.
I could see how the LCO got to it, but,
Yeah.
That's how I remember.
Well, it's strange for me because you guys all have a reference of when it was, you know, a full building, and it was like, people were there,
Yeah.
you know.
And I worked on.
Oh, really?
Actually, my cube was somewhere.
You should have refused to sell,
Yeah.
like, you know, like those skyscrapers, then there's like a little house, like in the middle of it, and then.
Yeah, that would be great. It was funny too, the Addison.
I know that when I first started, there was talk of redoing it all, but I mean, yeah, I mean, it's good, so good with the second floor. Yeah.
He was probably.
You like you prefer the cube or, yeah. Yeah. When I came up, I was Sempra, and this is how everyone was.
Yeah.
5 days a week.
Yeah.
You knew everything about everyone. You're
Oh, no.
There's a 10-year.
Yeah, thank you, Chair Gillette. We caucused and the company has no redirect. Okay.
Thank you. Then let's pause and just remind ourselves of next steps. So I recorded 7 lay file exhibits, which we'll upload into our case management system. Lay file exhibits are due June 8th. If requested, we'll have the lay file hearing on June 13th at 10 a.m. A reminder that the lay file exhibit is, if we have the hearing, it will be in person. Briefs, draft decision, written exceptions, oral arguments, et cetera, that those dates are all posted in the case management docket base. I don't anticipate any changes to those. But if there are changes, of course, they will be noticed in the docket. I think if we do have oral arguments, if oral arguments are requested, I believe we're going to be holding them by Zoom. We'll let you know if that changes. Are there any administrative matters before we adjourn for the day?
None from the company.
All right, then thank you to the witness panel and our stakeholders. We are adjourned.
Those are me.